coming up in about 9 minutes. Yeah, all right. But as always, why are you joining us? Well, you're joining us today because it is actually the 25th, not the 24th. We did not go back in time. And we are, again, as always, focused on if this is a trap day, a opportunity to rally NVIDIA down the way it is, and will we see a little bit of a reversion strategy? So we'll talk a little bit about that, how to set that up at about 9:10. We'll go through different ways to ensure that you have volume weighted average price set up in case NVIDIA does get off the mat a little bit later today. In addition, what is this a trap day? We're going to talk about momentum in a second. We kind of come back to equilibrium on our poor man's reading on the broader market. However, it is still negative. We'll dig into that momentarily. I don't know what you guys are chatting about. Oh, talking about Todd. Todd is awesome. So that's fine. All right. We'll be live all day today and tomorrow. Once again, full day of commentary, and Friday, half day. Everybody gets out of school early on Friday afternoon. All right, here is our reading right now. This is the poor man's version, which, again, is important to note because we're just watching flows in, flows out as we kind of chop around at this exact moment. And kind of coming back from the dead, which very sharp move yesterday. Big names, big shifts in a lot of those upper echelon tech names. WDC, Western Digital, AMAT had a big day. Even First Solar stocks starting to heat up once again. The stuff that's under pressure is the economy. It's the cyclicals. It's the CCL, Royal Caribbean, Norwegian, Williams Sonoma. Those are the ones that are still getting beaten up at this moment. Broader market momentum in the Russell still remains extraordinarily weak, but we did have a little bit of positive indicators coming in yesterday. And it's very, very possible that if we can just get a nice rotation of all that capital that's leaving NVIDIA today into some of the smaller names, on maybe the 493 stocks in the S&P 500 that all the big funds seem to ignore, then this can help us have a little bit more confidence in a continuation of the trend. But that said, remember, lower volumes right now. This is a tough week, but I'm not shocked when there is some sort of squeeze based on the metrics that we talked about last week. We mentioned that insider buying to selling on the aggregate had picked up to the largest level since April. We also saw that our reading of breakout stocks and breakdown stocks had effectively hit zero. So the breakout stocks had hit zero. And when that happens, that is where we can see a bit of a squeeze. Well, today we've got copper leading the board, orange juice, silver, and crude continuing to break down on global supply concerns, meaning that there's too much of it, too much oil. What do you think of that? All right. A little bit of news. Same things every day. More chatter about rates. Hey, nothing like a good conversation about interest rates to start your day at 8:50. A probability of a rate cut has moved to 85%. 85%. It was just a week ago that we were under expectations. We were under 50%. We hit 50% last Tuesday. And what's going on here? Well, it was a radical shift because, once again, the central bank was suggesting that they weren't going to make any move on this. And then, well, what did we say? We said that they would find a reason for it because, once again, there are concerns about liquidity in the financial system. This will help collateral quality if you cut rates. And we are still watching the SOFR, which is still hovering up and about over that Fed funds rate. Remember the SOFR, which is our repo markets. That is where it is collateral-based lending, and the Fed funds rate is uncollateralized, and it is not a good sign when collateralized lending costs more than uncollateralized lending, because that's like a pawn shop demanding more interest than the local mob. All right, so key things to keep in mind. A boost would provide some support to risk assets. But to be very honest with you, we're so far behind the curve on some of this stuff. We've seen a lot of consumer staple stocks just get absolutely pulverized. So, keep an eye on the defensives. The defensives need that rate cut, but even then, like lower highs, lower lows, names like ConAgra beaten up. The defensives are really, really struggling. And if we can get a breakout on the XLP, that is going to be kind of really the longer term over the next year possibility of a rally in the XLP, especially if there is a rotation, but it's going to have to come largely out of the tech sector. A surprise no cut could easily spark a reversal. And don't put anything past these guys. They don't know what they're doing. Rate expectations will drive global flows, but obviously everything flows through liquidity, which means the repo is more important. And the tickers to pay attention to are obviously the SPY, the QQQ, NVIDIA, AMD, and watching the UUP. And just the idea here is that the markets are front-running the Fed and they're front-running liquidity. Bitcoin bear market. So here's the key thing. Why are we watching Bitcoin? Why are we paying attention to what BTC is actually doing? We pushed down to 86. We were up at 120,000 earlier this year, back here all the way in October. And we have pulled back very significantly. Now, Bitcoin is very volatile. We have these ebbs and flows. We have these moves like we saw in February. And this is very important to note. Bitcoin is a massive indicator of global liquidity conditions. So that sell-off that happened in February, it took us all the way into April, was a liquidity suck. Last year, 70,000 took us all the way down to 49 in about a week and a half. That was Japan, liquidity event. Late 2023, these big moves down that happened in 2022. This is all that crypto winter chatter that you hear about. It's really just a matter of, is there capital flowing through the financial systems? And what Bitcoin is telling us is there are still significant challenges right now, but we have bounced back a little bit from that 80,000 level. Why? Well, Japan just printed a lot of money, and the U.S. is expecting to be more accommodative in the future. But pay very close attention to Bitcoin, because when our signal turns positive, Bitcoin does very well. And when our signal goes negative, Bitcoin gets crushed, because our signal is not about flows of equities at the end of the day. It really is a measurement of leverage and liquidity in the financial system. Capital in, capital out, and markets front run conditions on liquidity. It's been this way since at least 2008. Keep an eye on BTC, Morrow, Riot, Coin. Look, all of these names, if we reverse, if we turn green and I say, hey guys, we're green, it's going to be everybody back in the pool on a lot of this high beta technology. This is also one last important thing to keep in mind, and that is we're watching the UK. Now, a lot of people aren't watching the UK, but I'm watching the UK. Market maker that sells big chunks of Bitcoin every day at 9:30. I would watch that show. You might not care about what's happening in the UK right now, but here's the reason that it does matter, right? British business and consumer sentiment hitting a huge low, 17 years, and that is taking us back to 2008. Consumer weakness means earnings pressure. British pound volatility likely into December. And I'm telling you all of this because this is going to impact the euro markets. Pay attention to what Blake is talking about with the US dollar and what's happening with the euro. But also keep in mind that there are a lot of names that are tied to this tied here. And one of the key things, we're not going to be able to pull it up on FinViz, but I want you to pay very close attention to things like the EWR, Germany. Where are you? EWG. There we go. Momentum has been weakening on German stocks. And these funds can and will face pressure because that negative sentiment can spill over into Europe, into the rest of the European Union, because, well, as you know, Britain is not a member of that anymore, and that's not going well. All right, so real quick, everybody's least favorite part of this show. I'm doing it. Sorry, Don. Stocks on the move. It's horrible. It's actually worse than I thought. So, what am I watching this morning? DKS. We're going to start right there. Dick's not a great set of news. They're going to shut some Foot Locker stores down to protect profits. That's always a hell of a story. Big move down at the very onset of some of this news, and then it has clawed back. This is going to be a name to trade all day. And what we're looking for is just movement. I did it again. It's terrible. All right. We're looking for reversions. We're looking for ups and downs following the 3-minute, and you have options that expire on Friday on types of names like this. Make sure that you look for these bounces, these rebounds. We've already sold off. We saw a little bit of a pop. We'll see if we sell off again at 9:30. Add it to your list, and then turn to some of the other names. Abercrombie and Fitch is in play again. 18% move today. Big earnings beat. Shockingly good company during its earnings. It's unbelievable. Hollister up 16%, $100 million in buyback, raising their EPS guidance to 10.20 to 10.50, expecting Q4 brand net sales approximately flat. Now, why do we keep an eye on this? Well, we're looking for a fade. Pretty simple. You have a move from 64 to 76. Keep in mind, the purpose of the market is to sell. And if that is the case, then we are looking for profit taking when the bell starts. Don't be the guy that somebody else hands this stock to. In addition to that, BBY, Best Buy, same thing. Looking for chop, focus on the day. Relatively okay earnings report. They hiked their sales forecast, so a lot of emphasis on tech, and consumers are buying. They're buying gadgets. It's a good thing, right? So BBY, same thing, right? You have a earnings move. You are looking for reversals. You're looking for a pop. You want to get over to TradingView or onto Thinkorswim and set up your key stocks, right? Setting up your Bollinger Bands, and just sell me something that I already have. And then what you're going to do is anchor to that key move, or maybe even that low of the morning. We'll be down here at 8:31. So we will see how institutions defend this and treat this stock for the rest of the day. And we will keep an eye right here. What we're looking for is a move from 1-minute anchor to volume weighted average price, which is the blue line. Nice moves, a lot of pops. Anchor this to the first move when the market opens. All right. See, people like the joke. Yeah? All right. Runner. ADI, REYN, open in Siri on the 1-hour chart. Thank you, Secret Agent Charlie, for your enthusiasm. We're going to go through how to set up volume weighted average price once again. We're going to show you how to set up the anchor as well, and the Bollinger Bands, which are the key ways to trade these types of reversals and look for these moves on the day of earnings. Once again, there's going to be a lot of names in retail that are on the move today. Looks like we did figure out how to get the runner up and running. We had some issues. There was some technical difficulties. But right now, we are looking at ADI. ADI is Analog Devices, and return, strength, and momentum. These are the names that are looking more and more attractive. I want to pull to the 1 hour here. This looks like solid momentum. And what I'm going to do here is actually look for, hopefully, what I'm looking for is a return to momentum in this market for a short period of time and focusing on either a short duration put spread or buying at the 240 level and selling maybe at the 245. Looking for a continuation here. Strong momentum. The stock has been very, very attractive the last couple of days and continuing its ascent. If we continue to see improvement in momentum, ADI and all those other semiconductor stocks can and should lead the way. That's why we are watching SOXL. But NVIDIA down today. A lot of weakness, obviously, on NVIDIA, which is critical. Looking for reversion. Down 4.5% this morning. Brutal. REYN. Reynolds Consumer Products. I don't have a whole lot to talk about this guy, but looking for some sort of momentum movement, and it just has been kind of boring. And that's not necessarily a bad thing on consumer products. This is a cyclical name for reasons I can't understand. It should be obviously on the consumer defensive side, but it's not. And what do? I'm looking just to sell spreads on something like this. If I need to, I'd have to dig a little bit deeper and see what type of spread is even plausible. But it might be down around the $23, $22 level. And the same thing that we're looking for when doing a put spread on a name like that, you sell a put, you buy just below that strike. And then, if you can, you look for an 80% probability of profit, a 20% return, and an annualized return of 100%. But there's not much here in this options chain. So Reynolds, slow, dull, boring momentum. Scratch it. Open door. Oof. This thing just keeps coming back from the dead. So Open Door got crushed for 2 years. Very ugly negative momentum. And now, in what is very confounding, it is showing strength in momentum while there are concerns and questions about the housing market. Makes perfect sense, but that's kind of how it works. Open Door, this is just going to be a momentum play, doing a call spread. And OPEN, what are we looking for? Buying at the, let's see, you go out 2 weeks on this. You don't have to do much. It's actually pretty good. The 7 is $1.06. This has to have earnings coming up. That's too. Let's see. February 26th. So no, that's interesting. In what's a very unusual options trade, the 7-8 call. Okay. 7-8 call for December 12th is $52, $52 to make 48, 92% return on risk, 55% probability of profit. And what do? Well, if it cracks back down to 750, you dump it because that's only about a 5-10% loss. Just keep a tight stop and look for a continuation of momentum on a day like today. And to the other side, Siri, this is a Buffett name. And Siri, if trading this, same thing as always. We go back to where Buffett was buying it. What's that mean? Well, SIRI. We saw Buffett buying this stock at 21.16. What I need to see is communication services stocks showing strength in momentum. We really haven't been there the last couple of days, but we are seeing a little bit of a bounce, a little bit of a return, and you got to go down to where this thing really bottomed out. And it bottomed out down at around the $19 level. So what you can do instead of trying to follow momentum on Siri is just play the high probability trade where you sell a spread and Go from there. You can go out to December 19th. You can go out to January 16th. January 16th, 19 and the 17, somewhere in that range. And what that will give you is only about an 11% gain, but trying to find something that would be a little bit more appealing. Maybe, I mean, even if you went out to February, it wouldn't be that bad, but it is like the December 19th. Well, just see what else we got here. Let's just take a look. January 16th. Even if you did the 1918, you could. The 1918, because that's actually going to set you up for about a 14% gain, 80% probability of profit. So find something that is the 15 to 20% level in terms of a return, 80% probability of profit, and try to get your annualized return somewhere over 80%. Okay. The dogs were snoring again last night. That means I was up. So I am tired. ODFL, this is a great company, and it just does not want to recover yet. This is a name that if and when this economy does turn a quarter and we do start to engage in stimulus, I will be buying it with both hands and looking for a 100% move in about 2 years. But for right now, the industrials, it's not looking good. This is a pure economic situation, and downside here, we break under these levels. You're going to watch that 132 level. That's where you're doing a spread, looking for a movement back down to maybe retest that 126 level. PEGA, never even heard of it. Sounds like Pegasus. It's not. It's Pegasystems. Technology software. Bad time to be in that sector. We're still coming off those lows. So this is still in a little bit of no man's land. If this can break above 55, I might try to trade it for the upside. But if we roll right back over, 54.23 is your line in the sand, and the continuation of trend is lower highs, lower lows. CF. We're doing this again? CF Industries. Yikes. This is tragic. Our economy is not good. Yikes. Lower highs, lower lows. This looks like it's going to retest where we were in April. So CF, same thing. Put spread, staying up at the 80 and selling to the downside. NVIDIA should be at the top of your list today. Again, big move down. Paying attention to Alibaba, which is breaking out this morning. The ABA. Nice move. Strength to the upside. Strong report. September quarter, 6-month interim results, beating Q2 revenue. And look for continuation in trend, positive move, positive momentum in the market, particularly for a economy that needs to pick up the pace on its stimulus. BABA, still like it for the long term, like that move off that 100-day EMA, and it continue. This is a Gianni stock. Pay attention to what Gianni's saying on it. I will be very interested to hear what he has to say later today. NEO is in play. So would WB as well. Weibo, that is my faves. I might actually buy into Weibo today at the 10 level. I'm a fan. I do want to see this crossover at the 1033 level, but same thing. Looking for positive movement in communication stocks out of China. This is a great momentum stock. It has been a great momentum stock. Same thing with NIO. Just watching all these names. Looking for contrarian bounce right now. And then on top of that, Google. Hey, Warren Buffett, everybody. Same thing, same story. Continuation of momentum has been massive because of Buffett's purchases. You can sell spreads and you can do well simply by looking down here. As I said, this was a great purchase because it showcased exactly what investors of all three ecosystems in the market are looking for. Remember, the world of value investing is not what it used to be. Value investors used to be about 80% of the market. They're now about 15. Then you have passive flows, which was 40% of the tape. About 50% of the markets are driven heavily by passive investment because of the ETFs and the mutual funds and the continued buying by retirees. And then you've got the leveraged funds, and the leveraged funds are somewhere around a third of the market. Now, why does it matter? Because these are the types of stocks that the leveraged funds buy. Google, they lever it up. They're not buying the stock because they think it's great. They're buying it because it's great collateral for the repo markets. Then the passive investors, there's over like 1,400 stocks that own Google in the ETFs. Forgive me, ETFs own Google. And then you actually have the value investor, the Warren Buffett of the world, and he's looking at all of this, which is fantastic. Very high margins, very high return on invested capital, very high return on equity, very high return on assets. That meets the definition. Plus, heavy insider ownership, very concentrated ownership. And, of course, they have a monopoly on search, which helps. Buffett likes monopolies. So, in this environment, it makes sense. And it's a good continuation of momentum. And if we continue to move higher on Google, it is because that self-licking ice cream cone remains in perpetual motion. That's the way to think about these markets. We'll talk some more about some of these companies today. We did a presentation on that over at NVIDIA 4D last week. It's a nice little way to just think about the markets. Hey, reminder, Black Friday. A lot of Garrett credits left. Actually, not really. There are many. I think my mom bought a lot of them. Turn $1 into $2. Apply your first $2,000 credit to any of the masterminds and trade alert services that are coming up for 2026. First come, first serve. Strict limit of 2 credits per available person. Come support. Call the support team for details. 623-244-5657. 2 R's, 2 T's in Garrett. Seriously. And you can win a Falcon F10 trading laptop. Claim your credit now. 623-244-5657. Code word Garrett. $1,500 value on that trading laptop. All right. So Guatemala. Good to see him. All right. Once again, volume weighted average price. Looking at the companies that have been reporting. Why does this matter? Well, again, if we are assessing the institutional weight around a particular equity, we want to see what the institutions are doing in terms of entering and exiting. Volume weighted average price is a great little tool, particularly for day traders, to analyze and assess the current state of an equity at what the institutions are willing to pay. Now, we go over to, I use TradingView because, again, this is what I was educated on. You go to indicators, and we go to VWAP, okay, volume weighted average price. And when you get to VWAP, I encourage you to go to the SPX first if you've never seen this before. Now, why does that matter? Because you're not going to be able to get SPX on Thinkorswim because technically there is no volume for this. Well, here's the thing. They are doing some sort of pricing assessment with options and with futures. Now, real quick, you are only seeing one line here. That is your blue line. That is the volume weighted average price. And these green lines are the first standard deviation of price. 66% of price action, 68% of price action is supposed to occur in these bands. Then what I'm going to do is I'm going to hit the little gear, go to style, visibility, forgive me, and go to inputs. Don't know why I made all those moves. And I'm looking for band 2, band 3. Band 2 is 97% of all price, would be between the first two bands, and 99.7 for the three bands. Now, what I want you to look for with the SPX, I think you should have this open on a screen somewhere at any moment of the day, all of the time. And I go back to a statement made by Stanley Druckenmiller, great money manager, in 2018. And he was complaining in an interview with Real Vision that markets have lost trend. This is a guy who made 30% a year for 3 decades. And he's telling you that trend is being disrupted. And what this means is you're seeing selling, and then all of a sudden there's an abrupt reversal. What's happening? Well, as he noted, the algorithms are programmed to buy down in that third and fourth standard deviation. So it's not shocking to see a move outside of the third deviation into the fourth standard deviation, where price action is down 0.02%, and then it reverses back to VWAP. Now, how do you trade this? Now, there's a lot of things that you can do with futures, but I just go over to the SPY. And when the SPY, or when the SPX, forgive me, gets into that fourth band, that's where I'm buying whatever is in the money expiring today. And I keep a tight stop. But I'm looking for that snapback. I'm looking for that reversal. And it doesn't matter if it's the SPY or it's NVIDIA. NVIDIA right here, cracking down on Monday, bounce back. Now this morning, and what we're going to be looking for today, as we move later through the day, our focus will be on whether or not NVIDIA gets down here into these bands, and we do see some short covering. Now, the other thing that we will add here, I add Bollinger Bands. And the reason I add Bollinger Bands is this is another standard deviation emphasis. And when we get outside of these bands, that is a 2 standard deviation measurement in these bands, that has led back to same thing, crack outside these bands and looking for a move back to volume weighted average price. It happened twice this morning with NVIDIA. The last thing that we're going to add is anchored VWAP. And it doesn't matter necessarily how you decide to anchor this. It's really a pretty critical way just to assess what institutions are doing based on the time frame that you choose. So if I'm looking at anchored VWAP, I may anchor it to the close of yesterday. So yesterday's close, that was 11:24 at 16 hours, because that is 4 o'clock. And this is, again, the line that institutions will be focusing on. In addition to this volume weighted average price, you get back up to this level, you're going to see, and you could see it already, you could see how this was tested. And now this will catch up. Ultimately, these two means will run together. But our focus here is whether or not, if we snap back down into the fourth band, a move to here and a possible move back up to here at 176, staying in the money on options that expire on Friday. We'll talk more about volume weighted average price later today. And again, all of those stocks that reported earnings, keep an eye on it. Anchor it to the first move that is made on the day, to the upside or to the downside for names like NVIDIA, but also for all of the companies that reported earnings this morning. It's a lot of opportunity to trade those names because the volume is going to come back online, and that is the secret to being successful, knowing the key technical levels and understanding that this is all a game between algos and you. And the more that you think like an algorithm, the better you will be. I will be back later today at 3 o'clock. So I hope that everybody has a great trading day. Don's coming up in a moment. He will not be playing Van Halen. And that's all I got to say about that. Everybody have a great day. I'll catch up with you soon.